Today, volatile oil prices retreat again after Trump says the Iran war will be over very soon.
Plus, stocks and bonds swing wildly as traders watch every headline.
And China's exports and trade surplus soar far above expectations in the first 2 months of 2026. This is Reuters Morning Bid, bringing you unfiltered market news and analysis straight from the Reuters newsroom 7 days a week. I'm Amanda Cooper in London.
And I'm Mike Dolan. It's Tuesday, March 10th.
Well, Mike, it's been a wild 24 hours on markets, and it feels like with Trump's comments that the conflict in the Middle East could be over very soon, he says, that a pressure valve has been released. But, is the market out of the woods?
Yeah, I think someone described it as a panic premium yesterday in the energy market, at least, and that's probably best describes it. But these swings in crude oil prices, at least, are virtually unprecedented. We've never seen moves of $25, $30 a barrel within a 24-hour period, back and forth of the scale ever. So where are we today? It seems that we're back below $100 a barrel, having reached almost 120 yesterday. As night follows day, the rest of the world markets complex, stocks and bonds have rallied on the back of that, some relief. But do we really know where this conflict is going? The Iranians have got a new leader. They're convinced that they're going to keep the Straits of Hormuz closed. We did get a little bit from the G7 finance ministers yesterday, talking about the possible release of special reserves, special oil reserves to help calm the oil prices. But in some respects, that was actually disappointing to some people who expected immediate action, possibly from G7 on Monday, and they just rolled out a possibility and an examination and plans that may lead to a release. So clearly wasn't just that. What do you think the traders in the market are saying, particularly in the energy market at this point? It must be a wild ride.
Well, I think, like you say, I don't know how often we've used the word unprecedented in 2026 already, and it's only March. If you take a look at oil market volatility, the CBOE oil market volatility index is at 100%, like you say. It feels like everything's super headline driven. And you mentioned the G7 finance ministers saying that they stood ready to release stockpiled oil. It's kind of a short-term solution. Stock doesn't generally replace flows, right? And it could be it might just take another headline before we're back well above $100 a barrel again. And like you say, it feels like the rest of the market is like riding on the coattails of oil right now.
So it's hard to get away from this phrase that comes up again and again, the whole so-called taco trade. Trump always chickens out, maybe slightly unkind phrase, but it's certainly one that's used endlessly in markets. And some people are again saying that the extent of the crude price rise and, of course, the gas pump price in the United States for consumers has been enough to see Trump signal a possible end here. But what do you think is going to be the readout for the wider financial markets beyond crude prices? How do the stock markets and bond markets and interest rate markets interpret this?
I think it's really difficult. Like you say, we've got huge swings in volatility that have in turn prompted huge apparent shifts in thinking, right? Like a week ago, the market was looking for 2 rate cuts from the Fed, no action from the ECB, slight possibility of a cut this year, 2 cuts from the Bank of England, Bank of Japan expected to hike. All of that, not exactly out the window, but certainly reversed. You've got inflation gauges for expectations out as far as 5 years soaring. So it feels like short-term stuff is apparently driving long-term thinking, but it probably feels like it can't last. I mean, it definitely feels that, traders are willing to use not an awful lot to buy the dip right now, but it's just a matter of time, really, right, before an oil price shock has reverberations elsewhere and longer-term ones.
Absolutely. I think the real worry here is the extent of the volatility if it's sustained at these sort of levels. And look, this morning we have Asia markets rallying again about 2-3%, having dropped 4 or 5% yesterday. The Seoul, which is the roller coaster ride of the year, easily is up about 4% today, having fallen 6% yesterday. These are huge moves in big markets. And I think if this volatility persists, there's lots within the financial system that depends on calm. And when you get a spike of volatility like that, bad things can happen. And I think regulators certainly and watchdogs are looking at that as closely as they are simply the oil and inflation calculation.
Going back to what you were saying about Asian markets, there's been a bit of kind of something of a bright spot on the macro front, right? China with this blockbuster trade report. Trump is due to visit Beijing this month, isn't he? How happy is he going to be about this?
Well, on one level, if you look at it's a spectacular report, it has to be said. I mean, if you look at it's the first 2 months of the year, so we get over this distortion that goes with Chinese Lunar New Year. So the first 2 months against the first 2 months of 2025, and exports are up more than 20%. And that's about 3 times what was expected. Imports are up too, very sharply, above expectations, and the overall trade surplus has expanded. But if you look at the details, the bilateral trade relationship, the exports and imports with the United States is fallen or continues to decline year on year. So in some respects, Trump has got what he wanted. To answer your question, that the impact of the tariffs on bilateral trade with China has worked. Thing is, the Chinese are able to export out everywhere else in the world, it appears, and this will have a fairly significant impact on its overall growth targets, which we saw last week, just under 5% for 2026. The interesting bit here is how much is China relying on exports, or is it able to get its own domestic demand going? And also, these are numbers before this oil price shock. So to what extent will this spike in oil prices have impacted Chinese economy?
For today's recommended read, check out Mike's column on how the fragilities in the global financial system could be upended by a prolonged oil price shock. The link for that is in the show notes.
And for more of any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player. And if you're on a smart speaker, just ask for the latest market news from Reuters, 7 days a week.
We'll be back tomorrow.